Hello and welcome to Credit Shift News and Update. This week I'm Paul Sweeney, co-founder and chief strategy officer here at Webio, and I am joined again today by our co-founder and CEO, Cormac O'Neill, and we'll be exploring some of the recent news stories, events, reports and trends in the credit industry. So before we get stuck in, Cormac, a sad day for you with your club Liverpool.
Yeah, Paul, I think it doesn't matter what we're going to talk about today. The big news of last week is, my hero Klopp deciding to leave Liverpool. As a lifelong Liverpool supporter, obviously Klopp is a legend with all us Liverpool fans. Gutted to hear that he's leaving. And of course, all the United fans are delighted, jumping up and down, thinking this is a great thing altogether. I guess I don't blame them, because when Ferguson left United, I was doing the exact same thing. It's easier to drag the boats down than to try and rise up. So that's what the United fans are doing. But no, definitely a big loss to Liverpool. He's been fantastic. I remember I took a tour of Anfield not that long ago, and they were talking about how much everybody within Liverpool loved Klopp. Indeed, when he was been given his office, he pointed to the office next door, and there was no name tags on it. He was asked, what did he want on the door, what type of a name tag, and he pointed to the door opposite, and he said, who's in that office? And I don't know, I think the answer was either the chef or something like that. And he said, well, he doesn't have a name tag, so I don't want a name tag. So he got the exact same type of door with no name tag on his office door. So yeah, look, it's a big loss to the club, for sure. But hey, listen, excitement to see who we get in to replace him. Rumor has that Ted Lasso's available.
Apparently he could be moving on from Richmond.
Coming in. Yeah, he's a good guy.
Yes, indeed. I don't follow football myself at all, so I'm kind of bemused by the sense of ownership that people have of a club that's a big private enterprise making money for some very wealthy multi-billionaire, and everyone feels still so attached to their club. I'm just bemused by the whole thing. I think it's an interesting business franchise. That's about as far as my interest goes in it. All right, listen, after that tragic story there, I think we'll just jump into some of the general industry news. 1 in 6 renters missed an essential payment in a single month, according to Which's latest consumer insight tracker, compared to just 2.8% of homeowners missing an essential payment. So again, big difference there between renters and homeowners. 24% of universal credit recipients reported missing or defaulting on a payment. Of those that missed a household bill, the most common bill type missed was an energy bill. Other commonly missed bill payments were council tax, water, phone, and broadband packages. Speaking of energy debt, the amount of debt racked up by prepay energy customers hit 1 billion, according to new research by BFY Consulting. Over the last 2 years, the numbers of prepayment meters, or PPMs, energy consumers in debt have risen by 220,000 to 750,000, a 40% increase. In early 2023, energy companies were forced to halt installation of prepayment meters under warrant, usually referred to as forced installation, due to concerns taken during installations. In 2023, even with a ban in place, the volume of debt on account grew by 5%, but average balances grew by 25% to £250, as total debt grew by 30% overall to 250 million in the period. Again, this is a sign that those at the very tip of the can't pay scale are finding it very difficult indeed. So again, tracking that coming through over time, Cormac, I think, again, we can see.
Mm-hmm. Yeah, I think it's kind of interesting that we're seeing here, if I'm hearing this right, that the most commonly missed bill is an energy bill. Okay, so people are prioritizing their phone and their TV package above their energy, or is it more a function of, well, look, energy is a vital service to have and therefore is less likely to get cut off than, say, your phone bill or your broadband provider? I would have thought that we would be prioritizing our energy bills, but that might be a function of it. Energy companies are a little bit more lenient than other providers of utilities. Don't know. That's what I'm kind of reading into.
What it says to me is also that the challenge for energy providers is so much higher in that they have constrictions and they've got particular legislative things that they must adhere to. So how do they keep customers on a bill payment track? How do they get promises to pay and make sure that people are able to comply with those? I think they have a tough job there.
Yeah, and I think you're right there. And I think we're seeing that ourselves from our utility customers. They have a lot of compliance, and I think the only way to do it is to have effective communication with their customers, and I think that certainly we've seen that anyway in terms of how we've been able to help our utility customers, try their best to keep their customers on track here. Yeah. So I think you're right on that.
I am surprised by that rise in the prepay market there. That's a huge increase. 40% in an energy market is a massive rise. Anyway, moving on to section 2, fintech, buy now, pay later, AI, and related news. We like to keep an eye on these sectors because they're the kind of leading disruption vectors in our business. The Apple Wallet, the EU is forcing Apple to unbundle its NFC chip, which is kind of the thing underneath their wallet. And this could be a game changer in payments. We could see Google Pay, Samsung Pay, and others on the iPhone as your touch-to-go payment service. Could be important for an increasing variety of services that could be used to perform that task. It's also my opinion, it breaks the cycle for Apple in terms of if you're always paying with your Apple Pay, Apple's getting all that data. Apple can charge what it wants per tap later on, whatever bundles of taps it wants to have. But it was really that access to the spending journey of a customer. We all know how much we're tapping these days. That data is going straight into Apple. And I thought was a real baseline data for their future financial services play. So this is a big change for them. It's also happening around the same time that Apple is being forced to allow sideloading of apps into its phones and the breaking of the monopoly on the Apple app marketplace, which is a disruption to the Apple ecosystem. Now, obviously, Apple are going to say that this is going to introduce increased risks to its customers, increased fraud in the marketplace, etc. But you've got to think it's probably got something to do with the $1 trillion of revenue that are coming through that particular pinch point in their value chain. But this is definitely one to keep an eye on. If Apple have to open up their phone to payments and new payment types, that's a new vector for all the credit collections companies and the credit companies and payments companies to think about what they're going to do from here on in. An example of a company that might benefit from this is Klarna. They are a company we have been keeping a bellwether eye on. And like everyone else, Klarna would love to be a subscription business. Klarna Plus is now available for $7.99 a month, and it enables members to improve their experience by receiving access to several features and offers, including waived service fees on the company's one-time card product, double reward points, and special deals with a variety of brands. Klarna continues to grow beyond BNPL into shopping and payments. Currently, more than 500,000 global retailers integrate Klarna's technology and marketing solutions. I took a comment yesterday on LinkedIn from someone in the payments business in Australia, And they were making the point that 40% of Klarna's payment traffic is straight through debit, not buy now, pay later, making this a very expensive proposition for customers and merchants who cannot take advantage of least cost routing. As the world moves on from buy now, pay later, the suppliers have to face the reality that they are becoming high interest credit card consumer finance businesses, which is the sector they told us was broken and that they were going to fix. I thought that was just a fantastic observation.
Yeah, it is.
Becoming more and more like a credit card company.
Yeah, and that's exactly what they set out to challenge and disrupt. So that's a really good quote. I actually missed that Klarna. What are they calling the Klarna Extra or Klarna Plus for $7.99 a month? So what are they offering you for that $7.99 a month?
You can imagine that, like if you were totting up fees and paying for everything, and there was a transaction cost to each of those, and you were able to bundle up a number of those and say, instead of paying €10 a month on tapping fees, I'm paying €8 a month, and I've got access to various special offers. I'm being given special insights to deals that are coming down the line, etc. Then, I'm just getting like an Apple Plus type deal. Like we get Amazon Prime.
Yeah,
we get all these bundled products, and really, it's a way to turn like episodic transactional revenue into a much more predictable subscription revenue base. And if Klarna can convince the market that it can actually keep this up, then its valuation is going to be a lot higher on an IPO.
For sure. I must take a look at that a little bit more detail.
I think you remember, Cormac, a few years ago, I had a mantra: every service wants to be a subscription service. And this is just a part of the same thing. I'd also be really interested in the AI part of that front end. So Klarna is always describing itself as an AI shopping as well, because you've got to be able to originate the deal, originate the purchase, and then fulfill the purchase and provide the finance for the purchase. And I'm just wondering how sustainable that origination piece is going to be, that you can find the product and then choose to buy it using the Klarna offer. And the point in here that ties to the earlier point is that if you've got a couple of cards on an Apple Wallet and you're searching through a web browser and you want to exit and buy, like where are you doing your browsing? Like, how are you finding that product? And I remember previously that most product searches took place over Amazon. If you're searching for a product, you go to Amazon, you put it in the search bar and you search. You don't go to Google to search for products. And that was a big shift. And if we now go to other services like OpenChat or OpenAI, Chat API, and we say, hey, I'm planning on running a birthday party. Make out a plan for me for 10 kids. What should I have there? Provide a list of ingredients and have them sent to me. Right? That's the disruption that Google is trying to face off at the moment with the move to generative AI. So all this stuff really ties together in a very slowly moving but massive foundational shifts in all of e-commerce. So it's going to be interesting to see.
Yeah, absolutely. And I'm sure Apple are going to, well, maybe they can't, but from that first paragraph, it sounds like they're being forced to do a lot, right? So if you're being forced to open up your phone to other forms of payment, and you're being forced to open up your app store, so to speak, they're two pretty big ones that I'm sure they'll be pushing back pretty hard.
They have to do it. Like this will be in their like 14.7 release of iOS. It's done deal.
So this is a done deal.
Yeah.
Oh, interesting.
It's I think it is I had this kind of conversation with somebody else running a technology company in the UK, and we're just talking about product market fit. And Klarna had a really strong product market fit and buy now, pay later. So we'll see how this, new AI shopping turns out to be, how sticky that turns out to be. Okay. Moving on to our final section, recent reports. I think this week there's the Money Statistics, January 2024, from the Money Charity UK. This report provides you with a wealth of data points that could be useful for your planning processes. We sometimes forget how big the credit industry is. I saw that in the UK, unstructured consumer debt had reached 221.5 billion in the UK, of which credit card debt was 68.9 billion. So this is a huge business, an absolutely massive business. The average interest rate on a credit card lending bearing interest was 24% in November 2023. This was 18.75% above the Bank of England base rate of 5.25%. UK figures show that 50.1% of credit card balances were bearing interest in September 2023. In December 2023, the average APR for a £5,000 loan was 11.52, according to the Bank of England. For a £10,000 loan, it was 7.16%, while the average rate on an overdraft was 35.36%. The dramatic increase in overdraft rates in 2020 was due to the new FCA overdraft rules, which banned high fixed charges, penalising accidental and short duration overdrafts, but at the cost of a rise in the average overdraft rate. Like, to take a moment there, Cormac, that
I'm wincing, Paul. I'm sitting here wincing as you're reading out some of those interest rates. Like, wow, credit card, we're at 24%. That doesn't be a high, right? But I think everybody out there knows their credit card debt is one of the most expensive forms of debt you can get. But overdraft at 35.36, that's a staggering rate. Really is, isn't it? And an overdraft's kind of like, something that you don't really pay too much attention to. Wow, at those interest rates, you'd be damn sure you'd be paying attention to that. That's for sure. The other interest rates, that's probably are what they are in terms of $5 grand, 10 grand. But geez, watch out for those overdrafts.
Yeah, I still think 24 is a notch off 25% interest on a credit card loan. Like, that's a lot.
Oh, it is a lot, yeah. But we all know credit cards are like, I would have said, if you asked me off the bat, what did I think the interest rates? I would have said 18, 19%, right? It's 24. If you asked me what an overdraft was, I wouldn't have got anywhere near that. I wouldn't.
I think it's it's, again, this is just a huge business. It's a massive business. And people often ask us, Cormac, about the size of this market and, what is the size of the market in credit and collections and refinancing. This just gives you a sense of the scale of how much money has to be managed out there and what happens. And I guess why we're in this business as well.
Exactly.
Anyway, food for thought. And that's what this report is for. Just to follow on with some of the particular, like, we have a focus here as Cormac on technology and digitization. And there are some rather illuminating figures in this report around social inclusion, which I think are worth bearing in mind. According to the FCA in the UK in 2022, there were 1.1 million adults who did not have a bank account. So this was 2.1% of the UK population. Now, when you say 2.1% don't have a bank account, you can go, it's a little figure. It's a small kind of 2.1%, like out of a whole digitization effort, like no big deal. But that's 1.1 million adults. That's a lot of people as individuals.
Yeah, but it's something we know, Paul, from the business we're in. We do notice that there's still a lot of people out there who do not have a bank account and are very much, cash week by week. We know that. So I wasn't overly surprised by that figure. That's kind of what I would have expected from the knowledge that we have in some of the customers we deal with.
A little add-on number to that was the figure of 3.1 million people that said they had paid for everything or most things using cash in the last 12 months. So again, we were talking earlier, all that stuff happening in the Apple Store and the Apple Pay and Touch and Go, and then 3 million people who only want to pay for things in cash. That's if you're mandated to be able to collect things like rent or other payments and people are only paying it in cash, how would you do that? According to Ofcom, 1.5 million households do not have internet access. So that again is a big number. This included 18% of households with members aged 65 and plus. So while we're encouraging maybe elderly people or people who are older to use the internet to run their finances and watch their payments and make repayments, nearly 20% of them don't have internet access. That's another eye-opener.
It's a high number, isn't it?
That's a high number. Another little factoid from this report, Fair by Design has estimated that the cost of poverty, the poverty premium as they call it, to a typical parliamentary constituency is 4.5 million a year. This equates to over 430 per year for a low-income household. So basically, these are the additional costs you have when you pay for things with cash, where you have to maybe pay your meter in advance or pay fees. But again, we've talked a little bit about the poverty tax, Cormac. Interesting to see a number put on it of £430 a year.
Yeah, it is, isn't it? Would I have thought it was that high? No. Be interesting to see where they're getting that number from. Yeah.
Yeah, it's again, I would have actually thought it was higher. So I also would like to go into it. I thought that number would be higher. The people who have to deal with this, of course, are the Citizens Advice Bureaus across England and Wales. They answered over 163,218 inquiries in December of 2023. That's up 6.52% from the December before. Debt was the second largest advice category in December, behind benefits and tax credits. So that's interesting. Debt calls were up 11.4% compared to December 22, while calls about benefits and tax credits were up by 10.3%. Calls about fuel, gas, electricity, etc. were down 14% from the previous year. So debt represented 20.5% of all issues dealt with to December of 2023. The top three categories were fuel debts, debt assessment, and council tax arrears. We touched on that council tax arrears thing last week. So again, just an interesting document that really takes you on a whirlwind tour of all the data points around credit collections, credit monies that people owe, incomes. It's a really good report for gathering those statistics and maybe putting them into your own reporting or planning processes to try and figure out how would you track these? How are they going to impact you? What should you be maybe planning for? And maybe what isn't showing up on your numbers? I was thinking, yeah, please.
I'm definitely going to download that report, Paul. There's some good stuff in there. We know, and a shout out to our friends in policy and practice, that there is a staggering amount of benefits and tax credits that go unclaimed that people just don't know about them. So I'm not surprised to see that figure being as high as it is. That's actually good to see. It's good to see people inquiring about what benefits and credits are out there. They're due to them. They're 100% entitled to them. And if if they're well educated about what's out there for them, that's a good thing without a shadow of a doubt.
I think conversational is particularly well placed for this, Cormac. If you're making an inquiry and you can be given a prompt to say, hey, have you actually looked at this particular relief scheme? Have you, do you understand what might be involved in that? And someone says no, and you can give them some. I think that's a great opportunity to use the technology a little and prod people and find out what they might know. And sometimes people, I'm guilty of it myself, we'll say we'll investigate it another time. We run out of time to do the thing that we're doing now. Like we say, we're going to solve this problem now. We work through it. We don't get it done. It just doesn't we don't come back to it. And it just moves on. So we didn't finish that application for that process. I was applying for an on-post account here in Ireland. It's a banking account. And, just getting a credit card set up, did I finish one? There was one thing left to do in that credit card process. And I just ran out of time to do it. I had to download statements and then upload statements to the portal. And I just ran out of time. A week goes by. I get a notification from OnePlus saying, I guess you don't want that account opened up. We'll terminate this process now. And I went, oh, I spent all that time setting up the account. I just ran out of time. So I think that there's a lot better ways of onboarding people and helping them explore what they should do.
Yeah, absolutely. I'd agree with you on that. And I also checked out on Post. So it must be a January thing here or something, And yeah, they've got some good offerings out there, whether it be bank accounts, credit cards, insurance. Yeah, so a bit of a plug for On Post here in Ireland, folks. Check it out. They've got some good deals.
I think, look, we don't have, they're not a customer of ours.
No, they're not.
Yeah, they're not a customer of ours. They've done, they're going to turn out to be a case study in a great turnaround situation where they were in a lot of trouble. They got on some new management. They turned that thing around. They've kept everyone on board. They've kept the unions on board. They've kept the staff on board and motivated. And they've built up new businesses and they've built up new digital offers and financial services. And I think it's just an amazing turnaround story for the Irish On Post service. So listen, after that barrage of statistics this week, we might look at some reports next week that aren't so numbers heavy. I think maybe something on the human factors behind driving a business in our area, the human factors behind maybe managing a business, age and psychology. I think we'll just take a slightly different tilt at this next week and just look at the human factors that we need to have on board to really make big changes in our companies. Okay, if that is it for this week's Credit Shift, thank you very much again for tuning in and hearing about the changes that are happening in this industry. Keep an eye on all things Webio at webio.com. We're continuously updating that with new information about what's going on with us. Many more announcements to come from us over the next couple of weeks. I look forward to seeing you again next week on Credit Shift, where we'll be exploring what's happening in the world of credit and collections.